Welcome to TradeTheMBA.com. This is John's report. It's for the 20th, and you can see that we're just continuing this slow. I know they've used the term melting up, but then the reality is that we've consolidated and we continue to move in the upward direction simply because there's no catalyst not to. I mean, where else are you going to go? Certainly you can wait it out and look for retraces, but unless something happens on the world scene that's unknown at this particular point, the known quantity is that the Fed is going to have to start tightening at some point, and the labor market is really going to be the test, and that will determine whether or not we start to see inflation or not. And even still, the expectation is that there should be some inflation, because without that, it's pretty hard to justify this moving dramatically further, though still, the 3,000 plus target that I've had for some time, and people forget this is a known thing, that despite all of the claims that we're at these super ridiculous levels, valuations have to rise if there's going to be significant inflation down the road, and there's no way that you won't have that if you unwind the Fed's balance sheet, because at some point those virtual dollars will become real, and that will impact overall prices. The NQ is not sharing in this. This is the interesting one, because a boost of the NQ will really drive the S&P even further. And that's fine. You might get this static for a while. No one's going to object to it, really. I mean, the fact that the euro keeps climbing is still going to keep pushing. There's a lot of talk that central banks really don't want this, particularly European ones, to get past this level. I don't know that they have a whole lot of control. There's just been this whole talk of demonetizing dollar trade and that, and getting out of trading oil and that in dollars, and that could have a significant impact. But the U.S. is very happy with the euro pricing and the low dollar at this particular point. They'll keep bashing it, because the reality is, with the growth issues that are coming through the U.S., that euro should be pretty close to parity, not 20% discount. So it's free trading for U.S. companies in that case. And I think this is starting to reflect it. People are starting to wake up to the reality is that in this particular case, treasuries have got, at least TLT in this case, has got to continue to plummet. I'm thinking 115 range, but that's still quite a ways to go, so I think that's still going to be a profitable trade. Again, it'll always have those bumps and that going in between whenever there's fear related, but at this particular point, seeing it even at that elevated levels that it is now is bizarre. And oil, I think you're still going to see oil hold on to most of these kinds of gains, particularly if you start to see, as we are, really decent numbers, and there's no real catalyst that we're not going to see growth, which is strange with the amount of gloom and doom you hear. And I think in that fear aspect, that's really something to pay attention to, so that you don't get caught up in it, because emotional trading, you got to go with what is, and the readings clear, like in this particular case, that gold is suffering a weak period at this particular point, but that, look at that short all the way up here. That's not sustainable. That's going to create the next rally in gold, not to mention the fact that you're already super oversold, and there's still plenty of room to go. And so here we go. ES, it wasn't a whole lot of movement the other day. I really couldn't do much of anything with it, but already get some resets here in oversold from having no particular action. That's what's going to drive us to 2025, and then from there beyond. So stick with it. Don't get discouraged at the low range right now, because that is going to change rather quickly, probably in the next few days, as we come towards the end of the month, and some people need to make some things happen for matching returns, that kind of thing. Those that have been out of equities or got fear and went higher cash certainly are going to have to do some makeup. So that's always going to have an impact, particularly as window dressing month and stuff comes up. That's the long and the short of it. As always, trade well. We'll talk again later.